Wonderful. Thank you so much. It's nice to see some of your pictures and names, but thank you for being here today. Sorry I can't be there in person like I had planned, but as a risk manager, it's best to not take risks with this weather that we're having today. So thanks for letting me join you via Zoom. But what I wanted to talk to you about today is insurance for startups and small businesses. And we always like to talk about what you need and when you'll need it. Because, I always like to say you don't need everything up front. So we're going to just kind of go through this. If you have a question, feel free to stop me and ask the question. I might not see if you raise a hand or something like that. So, just feel free to unmute and yell my name. Okay. All right. So a little bit about me. Allison read you my bio. And I do like to let people know, not only do I work in this business, this family business of ours, but I did have my own startup company and I have gone through all of the things that, a startup company does when they are getting started and growing their business. And I had Miss Laurie's Gourmet Kitchen, which started out as a food-based business. I actually made a family recipe for peanut brittle. Thought it would be a cute little stay-at-home business while I was raising my kids at home, and it turned out I was making and shipping about 6,000 pounds of peanut brittle in my second kitchen in my house every year at Christmas time. So I was shipping all over the world, and it turned out to be a little bit bigger than I was expecting it to. And I think it's an important thing to note that you can't always control the size of your business. And so I learned a lot doing that. And, it has helped me with my role in Kuzneski Insurance Group, but then it has also helped me as a mentor for startup companies because I've seen a lot, been through a lot, and can share those experiences. So I'm not just an insurance broker, but I totally get what you guys are doing. So I have done pretty much every role here at Kuzneski Insurance Group and took over as the president in the beginning of March. And we have been angel investors, my husband and I, for almost 30 years now. So we have seen a lot of startup companies come, go, succeed, shift. We've seen the gambit. And in my spare time, I sit on a number of boards, including hospitals and a university, and just became the first female chair of our Chamber of Commerce here in Indiana, PA. So I have a wide variety of things that I can talk about. So let's talk about insurance. We always say insurance is a piece of paper that helps you sleep at night when you have a business or if you own a home or a car. It's something that you pay for and you hope you never have to use. And there's, a lot of different ways that you can get insurance. So you can go online and get it. You can go to a broker that has just one line of coverage, like a State Farm or a nationwide broker. You can go to an independent broker like we are, or you can go to a very specialized broker that, maybe only does, technology companies or life science companies, things like that. But I always tell people, pick your broker and let them do the work for you, but make sure you're picking a broker that understands what it is you're trying to do. But if you just need a quick and dirty policy, you can go online. There's a whole bunch of direct to carrier websites that you can go to and sign up for a general liability policy or something like that. But many different ways that you can get policy. The key is making sure that you get the right policy and the right coverage for your company. Why do you need it? Because, sometimes it's required. You want insurance to protect your business, from your personal assets. And it's again, it's that piece of paper that gives you peace of mind and lets you sleep at night knowing that your business is protected or your personal assets are protected. And always the big question is, what does it cost? And so we're going to talk a little bit more about that. But my pat answer is, it depends. So we will dig into that a little bit more. So what I always like to do is talk about, sort of the startup small business life cycle. And, obviously there's a number of steps in between each of these hexagons, but we have worked with groups that are just getting started, idea on a napkin, thinking through what the risks are around your business idea and things like that to help kind of guide, where would we need to get insurance down the road, or what might we need, and what are the risks to someone who uses our product, or to us as the business owners of this company. So, you might be just getting started, and what do we need at that point in time? Maybe you're taking on investors or you're getting funding from a bank. That's another step where we see a need for more insurance or different insurance. Maybe you're building your product or you're opening your doors, and your product is getting ready to go to market. That is another stage in the life cycle where, we need to review what you're doing and make sure that you have the right insurance. If you're trying to attract talent to come and work for your company, what needs to happen at that point in time, and how can you use insurance to attract those folks? And then, we have a lot of startups. They're out there because they want to have an exit. And other people, they want to start a business, so they have a job and they want, something that they enjoy doing. And so, what happens if I just want to run my business for the rest of my days? What do I need to do? So that's kind of our, the life cycle in a boiled down, basically. But let's talk about this. So you're just getting started, and we always say, ask yourself, is this business even insurable? Because we have seen over the years things that we could not get anybody to write insurance for. And I think that is something that is people don't understand, is that sometimes a broker might only have a certain number of carriers that they can go to. So the carriers are the insurance companies. So like Hartford or Chubb, things like that. If those carriers don't have an appetite for what you are trying to do, they will not write the insurance. And so, if you go to one broker and they say, I can't get you insurance for this, then it might be time to go talk to another broker who maybe will have a different set of carriers that they can go to get that insurance for you. And, I think carriers are not always as quick to catch up to the technology or the ideas that, entrepreneurs come up with. And so it takes them a minute to catch up. So when that happens, you want to make sure that you have a broker who can sell the risk of your business or your idea to an insurance carrier to make sure that they will actually write the insurance for you. So, once you determine, I think this is insurable, who says you're going to need insurance at this point in time? So if you are renting space, your landlord is going to require you to have insurance. If you're taking technology out of the university or spinning a company out of the university, they're going to require you to have insurance. Your clients and vendors are going to require you to have insurance. The state that your business is located in, they will require it. Your employees and your investors or bank are going to require you to have insurance. And typically what they want you to have is general liability. Sometimes that includes product liability. We see a lot of the universities wanting product liability insurance right out of the chute. And we've had to push back on that because if you don't have a product, we can't insure something that doesn't exist. So if what we try and do is say, okay, we'll get general liability insurance, but then as you progress in R&D and are ready to create your product, then we look at getting you product liability insurance. But I always hate to see these startups that are trying to pay for insurance right out of the gate that costs more than what they have in investment at that point in time, and it can put a startup out of business. And so we don't want you to be insurance poor. So making sure that when you are looking at those contracts from vendors, or if you're going to do work with a partner or a client and they have specific regulations, sometimes it can be, the insurance can cost more than what you would get paid to do the trial or the uh, to work together. So having good conversations around those requirements can be really important to do. If you have employees, you have to have workers' compensation insurance. And workers' comp is required by the state that you're in. If you have employees, if your business is in Pittsburgh and you have an employee in Idaho, you have to have workers' comp in the state of Idaho for that employee. And so, it's important to do that. And a lot of people will say, oh, well, I'm just going to call everybody a 1099 employee and not have to pay them and just call them a contractor. And you have to be really careful about that. There's the DOL doesn't like it when these people are really employees and you're calling them contractors. So there's very strict guidelines around a 1099 contractor and a W-2 employee. And a lot of times, they'll say if somebody is a 1099 employee, you should still have workers' comp for that employee, unless they have it on their own. So if it's somebody who has a business and you're outsourcing graphic design to somebody, and you're paying their bill and it's over $600 and you send them a 1099 at the end of the year, that's not somebody that you're going to need to have workers' comp on. But if it's somebody who's truly working for your company, then you would need to have workers' comp on that person. When you're hiring employees, you might want to have employee benefits. So health insurance, dental, vision, life and disability insurance, all of those benefits that employees expect when they go to work for someone. Cybersecurity is really big. We always say it's not if you get hacked, it's when you get hacked. And so making sure that, you have good practices around, protecting your data, but, having good cybersecurity insurance is important depending on what you're doing online. And then auto insurance, if you are driving for your business, and you get into a car accident, and they find out, hey, they were driving to an appointment to meet with a client, then they might come after your business and not just you personally. So, sometimes having that auto insurance through the business as well is really helpful. All right. So if you are taking on investors, and most people, in that are in CMU and looking at, as being an entrepreneur, this is something that they want to do, is take on investors or, get funding. And anytime you are taking on investors, and maybe setting up a board of advisors or board of directors, you're going to want to have directors and officers insurance. So this is insurance that covers the board of directors or the officers of the company. My husband was on the board of a bank at one point in time, and the board sold the bank to another bank. And apparently there are attorneys out there who look for this to happen and immediately sue the whole board on behalf of the shareholders. And when, we saw that, we're like, oh no. But that's when directors and officers insurance kicks in. So it covers the legal fees of the board of directors. I sit on numerous nonprofit type boards, and that is always my first question is there directors and officers insurance? Because if there's, a fiduciary issue or something like that, that's the kind of policy that is going to cover me as a board member. And so if you're building out a board, and we've had this happen in the past where, people want these great people to be on their board of directors. But then when they see how much directors and officers insurance can cost, it's cost prohibitive. So, we always say, let those folks be an advisor to your company until you get to a certain point, and then build out your board when you can afford the directors and officers insurance. So, one of those things, don't let it hold you back, but, there's some ways that you can structure things so that it's not an issue. Another thing that we see a lot is when we have, an entrepreneur or a founder who is maybe, the mad scientist who's the one person in the world who can do what they can do. And if something were to happen to that key person, the business would be done. So we put key person life insurance around that person. And it's a life insurance policy that's owned by the company. So if something would happen to that key person, and it could be more than one person, but it would give the company an infusion of cash to maybe weather the storm of losing that person and finding someone else to do what needs to be done. So it's, an insurance policy against a real disruption to the business. All right, so you're opening your doors. Maybe you have a brick and mortar store, or you have an office, and you're going to be working out of the office instead of your garage. You're going to need general liability insurance, and this protects you from people who get hurt if they come to your place of business. So if somebody slips on the sidewalk, outside my window here, the sidewalk is completely coated in salt because I don't want someone to slip in front of my building. So, the general liability insurance will cover those sorts of accidents or issues like that. Obviously, the product liability insurance, if you have a product, when we look at, the risk around different products. So is it a medical device product is going to be more expensive than, say an app that my mom was playing on her iPad. And we've had, companies that have gone online to get their insurance and said, I'm a software company. And then, a few months later, they need to up their coverage because they got a big contract, and that was a red flag for the online program. And so now you have to talk to a person, and they want to know, what kind of software company are you? Oh, we're an autonomous vehicle software company. Very different risk than I'm a software company that maybe is doing accounting software. So that liability, it's really important that the carrier or the insurance company understands what it is you are doing. You can't just say, I'm a software company. You have to really think about how risky is what I'm doing. How risky is it? And does the policy that I'm applying for actually cover that? A lot of times we see policies for startup companies, and they were maybe categorized as to what they do. And when you look at the exclusions in that policy, it's very obvious that it's not going to cover them if something happens with their business. So you're paying for something that isn't going to do you any good. So, really being honest about what it is that you're doing and, where you are in process and things like that. And then truly looking at your policies. They're long, they're boring, all of that, but really looking at what does this cover? What does this exclude? And do I have any gaps anywhere? That's another thing is if you have insurance all over the place with multiple people, sometimes it's easy for there to be gaps. So, working with an advisor that can help you put your whole package together can be, a great way to do it so that you make sure that you're not missing something or duplicating something. We see that too. So, um, making sure that you're being really honest about what your product does is really important. Um, and another one is tech E&O. So that's errors and omissions. So if you have, one of those accounting softwares that, you think, oh, this is real low tech or not low tech, but low risk of, it's not going to kill anybody. But if it causes financial harm to a company that's using it, then that is a claim against you. And so your tech E&O insurance would respond at that point in time. So if it's doing bodily harm or doing financial harm is when, the insurance would pay. All right, so you're attracting top talent. And I know, when we look at robotics companies and, AI and all of the really cool stuff that's coming out of CMU, it's very competitive to get employees to come and work for you. And especially in startups, we've seen a lot of it, where you've got your young core group of founders, and then you have to make that first hire for somebody that, maybe has a gray hair and, all of a sudden they're going to want employee benefits. So, at that point in time, you're looking at health insurance, dental, vision, life and disability. There's voluntary benefits. You can buy pet insurance. You can buy, pretty much insure anything these days. But we see a lot of startups that are like, I want to give everybody everything. And, it's really important to understand, the cost around these things. When you're a small company, the rates are based on the age of your employees. So somebody 26 is going to be cheaper than somebody who's 50. But, what we try and do with our startup companies is really help them understand what is their budget, can you afford now, what can you add, at certain milestones. We see a lot of groups that start out with just health insurance and, are real excited when they hit that milestone and they can add dental insurance to their portfolio. So, these are important things to have. And, unfortunately for a lot of businesses, they're kind of table stakes. You need to have something to give your employees. And so there's a gamut of things that you can do, different ways of doing things. There's compliance around all of these things that you have to think about, contribution strategies, all of that kind of stuff. So there's a lot of things that go into picking your employee benefits. And, for, being in the business, our company is about 57 years old. I can tell you that it took us till the very last day before our policy renewed to decide which policy we were going to take. There's a lot of thought that needs to go into it. And so, working with somebody who will work with small companies and give you the time and attention that you need is really important, because there's a lot of thought that goes into it. Coverage that you're going to want to have as an employer is workers' compensation. And again, this covers employees if they get hurt on the job. the cost of workers' comp is a percentage of your payroll, and it's based on the job that the person is doing. So it might be a different rate for each person within your company, depending on what they do. So if it's a truck driver, it's going to be a lot more than a software engineer. So, it can vary depending on how risky the jobs are that you are protecting. Um, when you get employees, I always recommend getting employment practices liability insurance. This covers you if you fire an employee and they sue you. It covers, legal fees. Sometimes it covers the settlement or the payout. But it is really important to have EPLI insurance when you have employees. And don't think that family members are not employees because family members are employees. Friends are employees, and things can happen. And everybody might have the best of intentions, but things can happen. And so EPLI is a really important one. And then probably the easiest thing to do when you're first starting out your company is creating consistent policies and procedures. I just spent 2 hours on the phone with a company, and we talked about having good policies, consistent communication with employees, procedures that they do, for different things so that they're compliant with their grants. Just having those consistent things, if there's a safety issue, making sure your lab is clean, making sure that, things are properly labeled, all of those things that go into being safe, being, consistent, people aren't confused about what they're supposed to do or not supposed to do, that protects you. And that is your first line of defense when it comes to running a business. And so, that can be done cheap. That can be ChatGPT'd. There are a lot of different ways that you can do that. But that is the best thing that you can start doing from day one when you have a company is making sure you have those consistent policies and procedures in place. All right, so if you have an exit, and we have people who sell their companies, we have people who go out of business, we have, all kinds of different things that can happen for an exit. So what you need to do, consider from your insurance needs at that point in time. When you're part of a business, there are things that, you're covered because you're part of that business. If you are no longer part of that business, can you continue the policies that you have? If you're merging a company or you're being bought by a company, do you continue what you have, or do you merge your insurances together? We've seen a lot of times where, a company from the West Coast buys a company in Pittsburgh, and when they see the difference in cost in health insurance, they're like, you know what, we're going to keep that health insurance going in Pittsburgh, but we're going to move all the other insurance to the main company policies. And so, there's different ways that those things can work, but a lot of times we see that, benefits all get merged in and everybody's on the same plan from the parent company. And if you are leaving, a company, do you need to replace insurance with personal coverage? So if you were, had key person life insurance, there and, or group life insurance, and if you're no longer have that, do you need to replace that personally so that your family is protected? Do you need to get individual health insurance, disability insurance, things like that? Also, there's what's called tail coverage. So depending on your health insurance, there might be run out coverage. or if you have directors and officers insurance, going through an exit, you might want tail coverage that is going to cover you if something gets, reported that happened before the sale. So it's a good thing to have, and a lot of times required when there's a merger or a purchase of a company, so that the new company isn't taking that risk on. But then if you're just running your business, you've started a company, you're running it, what do you need to do to maintain your insurance? So you always want to make sure that you update any changes with your carrier. So whether you've moved, whether you've bought a new piece of equipment that you need to have covered, you're hiring new employees, all of those things need to be reported right away to your carrier. If things have changed, we've had clients that are like, oh, they moved 4 months ago and they're just letting us know now. If something had happened to their building or their business while they were in this new location, their policy might not cover that because it's on the other building. So making sure that we're making those updates in a timely manner is really important. File claims immediately. Some people like to wait and see what else can go wrong before they go through the process of filing a claim. But the sooner you get that done, the sooner things can get fixed, and the sooner you can get reimbursed for those costs. Big thing that we saw during COVID is people didn't pay their bills. They were either not getting the mail or, just thought, oh, well, I'll take care of this later, and it fell through the cracks. Used to be where we were able to, call the carrier and say, could you just reinstate this group? And they've gotten to the point now where they're like, yeah, no, we're not going to reinstate this group. And you have to go through the process of reapplying to, potentially a whole different company, because that company might decide not to reinsure you once you've reapplied. So, important to pay your bills. And then review and renew your coverage annually. So most policies renew every year. There's usually a 60 to 90 day window where you start getting information about your policy. Maybe things have changed in the industry, or, with these wildfires that are happening, or the storms that hit down south. Those can affect the pricing overall for insurance carriers. So, this is when you'll see, rate increases or, change in coverage, things like that. But it's important to review that, make sure that it is still the right policy for what you're doing. I'm sure you guys have all said the word pivot at some point in time or heard that. And we see a lot of startups change what they're doing, but you have to make sure that the policy that you have is either going to continue covering you, or you might need to change it to match your new trajectory. So reviewing and renewing your coverage annually is really important. And then continually review your processes and policies. I cannot say this enough. Whether it's from a human resources perspective or safety, all of those things are really, really important. And so being kind of strict about those things, I think, is your best line of defense. And doing that consistently is really important. So those are some of the things. I know we talked a little bit about, what do these things cost? And so insurance is based on the risk and, the amount that it needs to be covered for. And so the riskier something is, the more expensive it's going to be. And so, if you go online and you get yourself a policy and it's real inexpensive, and you're like, geez, I'm drilling into somebody's head to put in my medical device, that's kind of risky. And so, that might be one where you really want to check your exclusions to make sure that you are, doing the right, you have the right policy. So, and like I said, I always say it depends. It depends on what you're trying to do, um, who you're working with, where, I mean, we've had, from a pickleball clothing company, it was an ordeal because it's like, well, where are they sourcing their clothing from? Where are they, and it's like these people just wanted to set up an online store, and they weren't manufacturing anything, they were just sourcing it. And so sometimes it can be a little tricky to get insurance written. And it's not something that you can wait till the last second to get done. These things can take time. And depending on the time of the year, the carriers can get really backed up and it takes even longer. But I always say work with the broker that you want to work with and let them do their job for you. But if you have something that's really esoteric that you're doing, and they don't seem like they're getting it, it might make sense to talk to another broker because if they're not getting it, they can't make sure that the underwriters of the carriers are getting it. And they're the ones that have to say, yes, we will write this risk, or no, we won't. And they're also the ones that have to determine this is how much I think it would cost for us to write this risk. So, we have a lot of people that will say to me, oh, this isn't risky at all. It's really no risk. It's very low risk. And it's like, well, but let's think about what would happen if. And that's what those underwriters do. I don't know how those people sleep at night because they are constantly having to think of what could go wrong here. And so, just being realistic about those sorts of things is really important. Are there any questions? This is a quiet group today.
Can
I'm sorry.
you hear me?
Yes, I can hear you.
Oh, perfect. Yeah, so I was wondering, um, you were talking about having board members later
Mhm.
in their startup journey because you need to provide insurance for them or insurance for the board. Um, is that realistic? Do investors expect to be advisors? Okay, also if it is realistic and also if it is achievable because I don't know if someone who has equity in the company can't be a board member. And if they couldn't be or they could be in the future, if that relationship makes sense.
So let me make sure I understand. So, if you've taken on investors, beyond friends and family sort of rounds, then typically you're going to want directors and officers insurance because when you have investors, investors are the ones who um, can sue the company, and that's when the directors and officers insurance would respond. Um, so, you're going to want, when you take on that group of investors, angel investors, venture money, they're going to want you to have directors and officers insurance. Where we see issues is when a company is, starting out and maybe they find a key person who could help them. And I'm thinking of a startup company that was doing something around travel, and they had somebody at a major airport that was helping them, and they wanted to make that person a board member because it would give them immediate street cred. And that person said, well, you need to have D&O insurance. And it just was not feasible at the time for where the company was in their journey and their funding. So, they kept them as an advisor to the company, but not a board member yet. And until they could hit certain milestones and they could raise that money where it made sense to, actually have a board of directors and have D&O insurance. So, it's just one of those things where you have to balance, what you can afford and what makes sense, for your business. And we saw for a while there, directors and officers insurance is what would have responded during the Me Too movement. So Harvey Weinstein, Chubb Insurance was the directors and officers and insurer for basically Hollywood. And so, when all of that happened, the directors and officers insurance is what covered those legal bills and all of that. So the pricing for directors and officers insurance got really expensive for a while. And you know, startups couldn't afford that. So, think 15 grand a year for insurance, and you have one board member or, a couple of investors at that point in time, it's hard to justify that cost. And so, if there's a way to not completely formalize the relationship with a board member until you get that, and you might find some board members that are like, you know what, don't worry about it. I'm happy to be on the board. I'm not worried about this, blowing up or turning into something. Then, that's between you and that board member. But a lot of, experienced ones are gonna want you to have it.
Thank you so much. It was a very, very interesting talk. It was truly eye-opening. I didn't thought of this specific part of building a business, that's for sure.
Yeah, most people don't. I always say no kid, wakes up and says, I want to be an insurance broker when I grow up. And so, it's truly not, not in most people's core competencies when it comes to this. And, as a business owner, even for myself, in the business, when I think about what gets me excited about what I do every day, it's, in running a business, that's very different than I have to do this. I have to renew my insurance. I have to make sure that I have these things. Um, so working with somebody who can make that easy for you and really guide you through it so you don't have to spend so much mental energy on it is really important.
Definitely. Just I don't know if someone else had a question, but just going back on a specific question that I had before. So maybe I didn't get the consequences of not having this specific type of insurance for board members. What can happen if you don't have it?
So
I think you
if
got
you
yeah. Sorry.
if you would get sued, okay, you're going to have to hire an attorney. And, people can sue you for anything these days. And you have to defend yourself. So directors and officers insurance would pay for attorney's fees up to a certain amount, and things like that. So if you didn't have it, and you were sued, then the business would be on the hook for paying for those attorneys, and in defending yourself. So that would be the consequence of not having that. So the
I see.
consequence of not having any insurance is if something bad happens, you're going to pay for it out of your own pocket, and you're just
Hmm.
shifting that risk to the insurance company, and paying, a smaller amount every year versus, one big amount if something really bad happens.
Makes sense. Thank you.
Mhm.
Is
Anybody
there
else
any
have
kind
questions?
is there any kind of umbrella policy that would cover kind of a bunch of these as one package versus having to go out and get a bunch of different smaller types of insurances?
Um, so yes, so you can get what's called a business owner's policy or a BOP, as we call it in the business. Um, and that is usually, a lot of these things all together, kind of packaged together. So probably like your general liability, maybe some EPLI, that employment practices liability insurance, um, you can bolt on. A lot of times, you'll go to the same carrier and they'll want to write your workers' comp, your general liability, some of the stuff around the business owners that, maybe the auto insurance can get baked into your general liability policy. So there is a way to, kind of package these all together. Um, I like to explain them all separately, but yes, that you can get a clump of insurance policies all rolled into one package.
Thank you.
Mhm. And Jahan, did you have a question?
Yeah, hi Laurie, how are you?
I'm good. How are you?
I'm doing well. I'm trying to stay warm. Uh,
Yeah.
this is a pretty interesting presentation. I'm sorry, my video is not on, but it's funny. I just had a Hartford. I had a pay insurance with them. I have to renew it now. I'm looking at it, and it's interesting to know about the whole business owner policy. I'm just about to close my round, and they haven't asked me for any kind of insurance. Interestingly, nobody told us. Um, it, and So is it better to just go get a business owner policy, considering the corp is a C corp, or I was looking at how does it work?
So it depends on your business, and I think that's a really good discussion to have with your broker. And we have some people. I'm like, hey, employment practices liability insurance is really important, and they're like, yeah, I don't want to buy that. And that's a decision that they can make because it's not required to have it. But let me tell you, when you fire somebody and they don't think they should have been fired, they're going to sue you. And there are a lot of attorneys out there who will take that case on a contingency basis and see what happens. And and that's a decision as a business owner that you have to make. Is it worth the risk or not? And so, I think that when you look at what you're doing and, how you've taken on investors, you're closing your round, what else is happening and that's when you're in that life cycle. Those are those points where you're like, okay, I need to sit down and talk to somebody about my insurance and make sure that I have everything that I need. And sometimes you might already have a business owner's policy, it's just not packaged that way. And so we should probably sit down and talk and say, okay, where are you, what's going on? Are you hiring people? What's the next
I know.
stage for you? And then, determine what you need at that point in time. And sometimes, I say that all the time to people. I'm like, what are their requirements? Are they requiring any? No, nobody said anything. That doesn't mean you don't need to have it. And you have to think about, if I enter into this relationship with this company or this vendor, and something goes wrong, where is the issue there? I always think of it like with APIs, open APIs. I'm like, who owns the API there? If it goes bad, who owns that and who has to fix it? And it's the same thing when you're getting into relationships in business. And you're doing business with somebody. If something goes wrong, who owns that mistake or that product failure? So I think we can talk about where you were, where you're going, and where you are right now, and determine what's best for you at this point in time.
Sure. Should I send you an email? Do you want to, and we can take it off of this Zoom, have a conversation because I need
Yes.
to renew mine. I haven't renewed it. I'm just start looking and what I need, what I don't need, or adding it. So,
Yep.
and I'm a SaaS company, and originally initiated by university. University needed me to have insurance, otherwise I wouldn't buy it. My customer wanted me to have.
Yes.
So I'll do that. I have your email address. So I'll send you an email quickly, and we
Okay.
can set up something in the next whenever we can.
Okay.
Tomorrow,
That
today,
sounds good
whatever.
tomorrow.
Or no, today. All right.
That's
Anyway,
fine.
thank you
That's
so
fine.
much.
You're very welcome. You're welcome.
Okay then. All right.
Anybody else have any questions or no? Anybody want to pitch their business now that you've sat through this and um, maybe thought about it since you didn't do it at the beginning? All right.
Well, thank you so much for coming, Lori. And I think this was really great. So we will end the session and let everybody get back to their day.
Great, great. If you think of something or a question after the fact, you have my email address. Feel free to shoot me an email, and I'm happy to talk you through it. All right.
Laurie, have a nice day.
Thank you. You too. All right. Bye.
Bye.